Hey, this is Josh Taylor with Trade Advisor Pro, and I want to thank you for checking out our video today. Now, before we get started with today's free Forex training video, I want to give you a chance to pause this video right now and go to our website. Trade Advisor Pro offers you free Forex training videos, and trade alerts. And folks, you do not want to miss our trade alerts. We send out a bunch of trade alerts every month that are top rated in the industry. We send you our exact trades right to your inbox. Pause the video now. Go to tradeadvisorpro.com/free, and all you have to do is register and then come back to this video, and we'll be sending you a lot more goodies to help you with your Forex trading. Enjoy today's training video. So here's where we're at with this pair, and this is something to keep an eye on. We have to determine by watching this, okay, if price, because you can see when price is broken down through, like even just recently, a couple weeks ago, when it did break through, it rejected and came back up. Okay, what we needed is to figure out, and the only way you can do that is watch the market, watch price. Is this going to reject and then close out and start going back up into this little sideways channel between 1.6000 and 1.6274? Or is this the beginning, this little down move over the last month and a half, of a bigger channel, and we're going to see price drive down through? Now here's the deal. If price breaks down into this level here, which is, you know, the 158-ish area, 158.50, I would be looking to sell this pair. Now what happens if price does break down there? We need to figure out where we're going to enter. Now price could just go straight down and then we don't have an entry. I do not like getting in at no man's land. If price is going, you don't sell in here, because you have to put a stop at a protective level up in this area. You're going to have a 300 pip stop. What I would do is, if price came down deeper into this level, is I would wait for it to retrace back up and then sell here at the 1.6000 mark, and then we look for a 650 pip rundown, and that would be kick butt. So that's what I'm going to be looking for the next couple of days. I'm hoping price continues going down and shows the signs of pound weakness against the dollar, so that we can look for an entry to sell at 159.60. And I personally think that's where this thing's going. I can see the pound has gone up, and it cannot go up forever, guys. It just can't. You know, and this was such a strong move up. There comes a point to the market gasses out. When we're seeing price move like this, what happens is the buyers, the bulls, are winning against the bears, the people that are selling. And there comes a point to where there's not enough buying pressure to push this thing up any further. And ultimately, people start either closing positions, which means this lack of buyers that are willing to push the pound dollar up, or the sellers start moving in and looking for opportunities to go short. So I think we're seeing a combination of both. Personally, I think we're going to see this pair break down even further. But since we are right on the edge of election day, a lot of that's going to make a big difference. I think if the U.S. economy is seeing an outlook after the election that hey, the U.S. economy is about to do great things, then we'll see strengthening of the U.S. dollar against the pound, and I think we'll see a nice run down. We could see it push down. I would look for a bounce back up on some news announcement or any opportunity we can to take a sell position up in this area and ride this sucker down for 650 pips, which obviously you can see we're talking about multiple weeks. This could be months. This is the weekly chart. Now let's take this to the daily chart and see what this looks like a little bit. Now this is scrunched up, but right now we're just looking for key support levels. Now this is almost the same data as you're looking at weekly, but it's just scrounged down. So it's daily instead of every candle being 7 days. Every one of these candles is 1 day. But you can see all these main support levels are there, and we're right at a key support level. So what we don't know is price is coming down, it's going to shoot back up, or if we're going to see a rejection. Now I just paused the video for a second here, and I wanted to add a couple lines in here, and I'm going to zoom this in and show you a little bit more detailed on what I'm looking at here. So, and I get a lot of questions where customers are asking, you know, how do we tell what market direction it's going in, where, how do you determine the trend? So here's what I did. I drew out some lines, and you can see here that what's the trend from here to here. It's obviously up, right? It's not difficult. But how do you know in between whether the trend is going up. Now here's a sign of looking for it. You want to look for higher highs. If on an uptrend, you want to look for higher highs and higher lows. So you can see that we had a strong rejection. This is a pin bar candlestick pattern, strong rejection. There's a small one there, but those are here. See one here? You see rejection. And so first of all, we saw a strong rejection. So I was looking at, okay, we have a potential, at least an uptick for a while. But price went up to this level, to this high, down to this level, down to this high, down to this level, down to this high, down to this level, up to this high. Now let's look at this. Let's look at two things. Number one, if you look from here, I could actually pull this trend line deeper. It's pretty much, this is not the greatest drawn trend line, but for the most part, I need to redraw this thing out, but for the most part, you can see that this thing is squeezing its way up. The lows, when it drops down to its lowest level, are getting higher and higher and higher. Okay, that is an uptrending market. Now, usually you'll see higher highs. Now, if you don't see higher highs, be careful. You can see here that we have a couple key levels here. That price was holding at this level and a little bit lower, even in here. But price has come up to this level, continue moving its way up, hit that level again, rejected, working its way up. When you see that, you can see that price is squeezing its way in between these levels, and eventually you get a pop. Now here's what I would have done. I would have waited on this trade until it broke above the trend, or I would have actually bought several times on this trend. If I would have seen this price hitting here and hitting here, I would have waited until price came down, hit the trend line, put my stop down to this level, or actually past the previous low, and waited for price to go back up. And then what I would have done, I would have closed my profit up in this area here. Then what I would have done is waited for price to break this high that it continued to hammer against, which it did. It broke. Once it broke, I would have already been looking for a position, an opportunity to buy this pair right back on there again. And as you can see what happened, price came down, hit, I would have put my stop down this level here, and price shot back up. Now, you can see the opposite on the way down. We're working our way into a downtrend. You see this high, strong pin bar rejection. High, low. I guess you could say that. Low. The next high is lower than the previous high, down to a low, which is lower than the previous low. High, which is lower, low, high, low. You see it like a stair step. Boom, 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 boom. See how it's working? That is a downtrending market. Now, what we do see now is the last couple of days, it's almost doing the opposite. Okay, what this is, I'm looking at potential retracement. It's kind of been in a sideways channel for the last couple of weeks. And now price is broken down below this huge key level of 16000. Now what I'm looking for, I think long term this thing's going to drive down. I'd be looking to sell this pair here, but because of tomorrow's elections, again, be very careful. But if this price does continue to show weakness against US dollar, the pound does, I'd be looking to sell around 1,600, put your stop, a nice safe level up here. And then this pair, you should at least close a little bit of profit at 15900. If it continues going south, I would close a little bit more here, and then you just continue writing it down. So anyway, that's it for today. I know I didn't show a lot of pairs, but I wanted to explain a little bit more in depth about how we look at the market, especially how we determine trends, okay? And we'll talk to you later. Folks, I hope you enjoyed today's training video. If you have not done so already, stop this video now and go to tradeadvisorpro.com/free and register absolutely free for free Forex training videos, and free Forex traded alerts directly to your inbox. Go to the website right now and register for free. All kinds of goodies for you. Thanks a lot.